Welcome back. It's JWalter here, and here's our latest housing market update. In today's video, I'm going to be sharing two reports with you guys. Both of these are from Redfin. The first report is showing that there's a record share of home buyers looking to relocate to more affordable areas because of affordability issues in the US because of rising home prices and, of course, rising mortgage rates. The second report has to do with the second home boom coming to an end. In this report, they discuss why the share of home buyers looking to buy a second home has been decreasing greatly. So I'm going to be going over all this in today's video. So I hope you get a lot of value out of today's video. If you do, then hit the like button. Also, consider subscribing as well. I can definitely keep you posted with the latest housing market updates. So report number one, this is reported today at the time of this video, which is April 13th. It says nearly 1/3 or 32.3% of Redfin.com users look to move away from their hometown in the first quarter, and that is an all-time record high. The number of home buyers leaving Seattle has increased sixfold since before this pandemic has started. So a large number of home buyers are looking to move away from Seattle right now because of soaring home prices and also work at home arrangements there as well. And that's causing potentially a housing market slowdown in Seattle. In stark contrast, the number of home buyers moving into Miami, the most popular migration destination, has risen just as quickly. So again, a record 32.3% of Redfin.com users nationwide look to move into a different metro area in the first quarter of 2022 compared to 26% in 2019. So 2019, before this pandemic started, it was at 26%. Now it has increased to 32.3%. And this is due to, according to Redfin, skyrocketing home prices and rising mortgage rates, which is forcing some people to move to more affordable areas if they want to buy a house. So here's a graphic depiction of this. So 32.3% in the first quarter of 2022 are looking to relocate. That's an all-time record high compared to 31.2% in Q4 2021. When you compare this to Q1 2021, we're at 31.5%. But what I found most interesting in this report here, or this graphic here, is that as we all know, basically the first quarter and second quarter of 2020 was more or less when this pandemic started, right? So in Q1 2020, it was basically 26%. It was basically in line with the last couple of years at around 25 to 26%. But starting in Q2 2020, that share increased to 27.6% and then increased every single month well into Q1 2021 when it reached over 30%. Of course, one of the main factors that led to this is the work at home arrangements that a lot of people had once this pandemic started. So let's talk about Seattle. Comment below if you have any insight regarding the market there. But home buyers are leaving Seattle at a much faster pace than before this pandemic, according to Redfin. A typical house in Seattle sold for $750,000 in February. So the average home in Seattle as of February is about $750,000. That's up 15% year over year. That's the 8th most expensive major metro in the US. And because of soaring home prices there, and of course a lot of tech jobs there, which can be done remotely, a lot of people have looked to move to more affordable areas and sunnier pastures, as Redfin notes. At the same time, would-be homebuyers leaving Seattle is one reason why its housing market is showing early signs of a cooling. Again, comment below if you have any insight regarding the Seattle market. I am not familiar with the Seattle market, but it's interesting to hear everyone's take though. Seattle had a net outflow of nearly 24,000 residents in the first quarter, up from about 10,000 a year earlier and about 4,000 2 years earlier, before this pandemic started, of course. And they define a net outflow as a measure of how many more Redfin.com users look to leave an area than move in. So an outflow meaning there's more people looking to leave that area than to move in. And you can see that here in this graphic here in Q1 2022, they had approximately 24,000 was their net outflow, compared to Q1 2021, 1 year ago, was about 9,770. And before this pandemic started, Q1 2020 more or less, we only had about 4,000 people looking to move. Now it's 24,000. So a big increase since this pandemic started. And by the way, Phoenix, Arizona is the #1 destination for Redfin.com users leaving Seattle. While Phoenix home prices are up significantly from 1 year ago, the $456,000 median price is still far lower than Seattle's $750,000 price tag. So here are the top US metros by net outflow, meaning they have more people looking to leave the area than to move in. Number one is San Francisco at a net outflow in Q1 2022 of 52,964 compared to 1 year ago, or Q1 2021. It was just under 41,000. The main destination for people looking to move away from San Francisco was actually in Sacramento, California. And last year, we've helped so many people move from the San Francisco Bay Area into the greater Sacramento area. So I'm not too surprised by this because I think the single family home in San Francisco is around $2 million. In Sacramento is approximately $550,000. And we're only about an hour and 45 minutes east of San Francisco. Los Angeles was in second place here with the biggest net outflow for major metros in the US. The top destination, I found that to be interesting. San Diego was a top destination for people looking to move away from Los Angeles. And New York, the top destination was actually Miami, Florida. And at number 5 was Seattle, Washington, with a top destination of people looking to move away from that area into Phoenix, Arizona. And here's a pretty mind-blowing stat here. Nearly 6 times more homebuyers looked to move to Miami in the first quarter than before this pandemic started. Miami was the most popular migration destination in the first quarter, meaning Miami was the most popular destination for people looking to move out of the area. Popularity is measured by Net Inflow, or how many more Redfin.com users looked to move into an area than leave. The number of residents flowing into Miami in the first quarter was up nearly 6-fold from 2 years earlier, and it almost tripled in Tampa and almost doubled in Sacramento, California, where I live and work as a real estate agent. So according to Redfin, here are the top 10 US metros by net inflow, meaning more people looking to move into the area than move out. So the top metro area there was Miami, Florida. And the top origin was actually New York. So more people looking to move from New York into Miami, Florida than any other cities. Phoenix, Arizona was at number 2 with a net inflow of 14,000 compared to 12,400 in Q1 2021. The main origin was Los Angeles, California. A lot of people looking to move from Los Angeles into Phoenix, Arizona. Sacramento, the top origin was actually San Francisco. Las Vegas was actually Los Angeles as well. A lot of people looking to move away from Los Angeles into Phoenix, Arizona, and Las Vegas, for example. And also Dallas, Texas as well. I was interested to see that Dallas, Texas, the top origin was actually Los Angeles, California, for people looking to move into the Dallas area. Okay, the second report I want to share with you guys today is this article here, according to Redfin here. It says the pandemic-driven second home boom is coming to an end. This was just published 2 days ago. It says after last year's frenzy of vacation homes, buyers are now backing off amid rising mortgage rates and an increase in loan fees for second homes. I remembered early on during this pandemic, the top destinations in California, for example, were in more vacation areas like South Lake Tahoe, Mammoth Lakes, for example, and also in Carmel, California as well. In any case, let's talk about this increase in loan fees for second homes. So according to money.com, new second home loan fees took effect on April 1st, 2022. Those rose between approximately 1 to 4%. And that will add approximately $13,500 to the cost of purchasing a $400,000 house for the typical home buyer. In addition, they say that home insurance is also very expensive for second homes compared to primary residence as well. Another factor also that potentially could be hurting demand, of course, is because of the tanking of a U.S. stock market, of course. That wrapped up the worst quarter since the onset of this pandemic. It says here stock market losses mean that some home buyers' down payments and their nerves probably took a hit. So meanwhile, according to Redfin, demand for second homes or vacation homes dropped sharply for the second month in a row in March. And they measure this by rate locks for second homes, and that has dropped to the lowest level since May 2020. However, demand for vacation homes was still up 13% from pre-pandemic levels, but it's declining. They expect demand for second homes to remain above pre-pandemic levels in the future as work at home is here to stay for many Americans. However, the slowdown in demand for vacation houses joins other early signals that the historically fast rise in mortgage rates and record high home prices are pricing out some home buyers. It says here when rates and prices shoot up as much as that, a vacation home starts to look more like a burden than a good investment and a fun place to bring your family to on the weekends. And that, of course, has caused a lot of home buyers to have second thoughts about buying a vacation home. The new second home loan fees, of course, kicked in on April 1st, and that's also a deterrent as well. So here's a really good graphic that I want to share with you regarding the demand for vacation houses versus primary residences here. So the red line here is the demand for second houses, and also the demand for primary residences is in blue here. So as you can see here, this goes back to January 2015. The demand for primary residences was slightly more so than demand for vacation houses. And that was true all the way basically until this pandemic started, basically back in, let's say, March or April 2020, when, of course, the demand fell off the cliff for all houses. But ever since then, the demand for primary residences increased greatly. But look at the demand for second homes. It basically went from an index of approximately 60 to a peak of over 180. But that demand for second homes has been on a declining trend basically ever since 2021. And now we're at levels less than the demand for primary residences. So they're saying that primary homes as of March 2022, the index reached 134, and that's an increase of 34% from pre-pandemic levels, versus at this time as well for second homes, they're only at an increase of 13%. So it says the interest in vacation homes skyrocketed in mid-2020 as many affluent Americans started working remotely and mortgage rates dropped to record lows. Again, reached all-time record lows in January 2021 when the average 30-year rate was approximately 2.75%. And it says here mortgage rate locks for second homes reaching a peak of 88% above pre-pandemic levels in March 2021. Demand declined sharply over the past 2 months, though, as mortgage rates shot up to their fastest pace in history, reaching 4.67% by the end of March. Now we're at approximately 5% for the average 30-year fixed-rate mortgage at the time of this video. And some workers have started returning to the office as well, which has caused further decrease in the demand for second homes. So comment below with your biggest takeaways from today's video. Also, if you got any value out of today's video, then please hit the like button. I greatly appreciate that. Also, consider subscribing if you haven't done so already. Hope you have an awesome day. I look forward to seeing you on the next video.